Welcome back to Income Trading 101. Today is, what is today? Wednesday, March the 31st of 2021. Today, I'm taking a look at Nvidia Corporation, symbol NVDA. This is a company that I've watched some, I've watched quite a bit actually. And, the technology sector has kind of gotten struggled a little bit this year as the rest of the equities have gone higher. So let's just take a look at what the charts might be showing us. And right off the bat, I see some sideways channeling. Let's just go back and see. I want to get as much of a full picture, as close to a full picture as I can. So this is far back as TradingView. I'm using TradingView. Will allow me to go, which is the 10 years. And I can see this, for the longest time, this was a stock that traded under $40. And then it popped back in 2017, leading into up to late 18, pulled on back just before 19. And it's sort of been on a grind higher. Like, I like the fact that even when you look at, the pandemic offset, which is what happened mid-February to mid-March of 2020, it pulled back, but then it quickly, has just rallied. So I'm going to get rid of volume. We're going to analyze that full post-pandemic rally from basically a year ago. It's been a year. So we'll start off with our moving averages like we always do. Get a few of those in there. We're going to do the 10-day, the 20, and the 60-day as well. So I like to have my 10-day green, because that's my shorter move. It'll be my signal to buy. I turn my 20-day red, because that's most likely my sell. Those are one on top of the other. It gives me an idea of if price is going higher or lower. And then my 60-day gives me a little bit longer term view of where this stock has been and where it might be headed. So you can see during this up move that the 10-day was higher than the 20. You had a pullback that created a little bit of congestion of these. And it's really been kind of sideways since then. And I can't say too much more about it now. I mean, even when we look at this little zoomed in, you've got congestion with the 10-day being higher than the 20, but lower than the 60. So let's change the time frame and see if it gives us a little bit different view of things. Oh, and I pulled it way back. We'll go back to there. So we're going to go down to, let's just take a 4-hour look. 4 hours is still closer to a day. Gives us a good look at what's going on. Still congestion at the, actually, I'm sorry. You've got the 10 below the 20, below the 60. So in the 4-hour time frame, you actually have a downward trend. I'm imagining when we go lower, it's going to look a little different because of this retracement that we're in right now. So here you do actually have all three in line, because the 60-day is lower than the 20, which is lower than the 10, which is a sign, at least on the 1-hour level, it's a sign that the moving averages are showing that prices are trending higher. So at the 1 hour, we're trending higher. The 30-minute, of course, we're trending higher. It'll be the same for the 15, most likely. Yep, significantly so, especially because of that gap move right there. So there are other facets, other features that I think might be a little more relevant for trading this stock right now. But for now, let's go ahead and dive into the MACD portion of this. I like the MACD. It gives me a good look at where momentum might be heading. And, it's hard to use the MACD during trending markets because it'll stay either fully positive or fully negative. And you really can't trust that any movement, any crossover of the MACD line and the signal line truly is going to be indicative of a signal to go long or short. So you can see, like, for this long period, it stayed above the zero line. But here's where I don't I don't use the MACD. I don't use the MACD during times of channeling market sideways. This will chop you up and simply have you losing more money than I care to lose. So let's take it down to we're just going to hop into the 1 hour. So the 1 hour did show that there was a crossover late last week or March 26th. That crossover gate did it pulled positive. So the 1 hour, it's still looking bullish. I imagine the 30-minute. Yep, 30-minute looks bullish here. Even though it crossed over, it never crossed the zero line and now appears to be heading even higher. Let's take a look at the 15, which I'm sure you had a crossover back here, and it really did pull above the zero line. So it pulled positive. Positive just means overbought. Negative is oversold. Now these little crossovers here, like I said, can get you chopped up. I don't trust them until they cross fully into negative territory or opposite whatever territory the cross happened in, because you see how this kind of flattened out and then pulled higher again with this gap move. So this is actually a little trickier stock to trade right now because of the sideways nature and the possibility of having a breakout. So let's do a couple of other things. First thing I want to do is take a look at what this channel actually looks like. We are going to, I'm going to draw a pretty little line right there. I sound like Bob Ross, don't I? Just add a tree there. Okay, so when you pull that in, that's really interesting. But here's what I'm going to do. I'm actually going to pull it across and see what's going on. So what's interesting here, and I'll try and keep it from swaying too much, but if you notice, the bottom of this channel has held as support straight across. We did drop lower, and now we've pulled back within it. That's really interesting and an indication that resistance level could be a valid one and one worth paying attention to. The other thing I'd like to do is do just a quick Fibonacci retracement of this last larger move. I'll take it all the way there to the tippy top. And I'm going to pull this in a little bit just so we see all the levels too. So, well, surprise, surprise, surprise. Look at this, this support level that maintained all through here and has sort of been support right now. Although we did drop a little bit below it, but right around that $513.45 level, that was the 23.6 retracement. That's the first big retracement. We didn't make it all the way to the 38.2%, but it did hit 23.6, which is one of the Fibonacci retracement levels. So whenever I see support lining up with that, with another indicator like a Fibonacci retracement, it lets me know that it sort of like validates it with more than one indicator. There's some value to that level, and we aren't too far from that level right now. We're only $20 above it, which is nothing for a $500 stock. So the other level, I'm going to get rid of this. The other level that I'm really concerned about right now is this one. I'm just going to take this a little further in. It's, this here. And the reason why I'm watching that is that was the most recent high. If we can't break that, then expect this to go lower. I would expect this to be a pull. But if we do break that and start creating, higher highs and higher lows, then that might be a sign that this stock is actually going to pull a little bit higher again, possibly even retesting, I would say, the next. Let me pull this across too, just to get a better sense. See if there's anything. That high is close to the high of the previous channel, but it really isn't. So I don't want to see things that aren't there, but it's worth noting that some of this might be relevant. Some of these levels that I'm drawing out visually, if I was actually to go ahead and use look at it numerically, might see that these levels are actually a lot closer and a lot more tied together. So for me personally, trading markets, these channeling markets, I just get chopped up. So if I were entering this trade right now, I'd probably be looking for a trade that would either profit from continued sideways noise, or I'd just wait and see if a breakout's going to happen. And if a breakout doesn't happen, I might take a look at a short-term trade that would possibly retest that low that was somewhere around the 520 range that we looked at just a minute ago. But the biggest thing is figuring out what your best trading style is going to be. I know that like my kryptonite is sideways trading markets. I'm much better in trending markets, so I look for indicators that let me identify trends and go from there. I want to trade with strength, and that's the other thing. That's the biggest problem with sideways markets. Like, let's say we were back here and there is a pullback and you're trying to decide whether to buy or not, but you see all of this period. There was already an established uptrend both in this stock and in the market, so I would be really hesitant to sell that, whether it was on a short-term or longer-term basis, because the strength is clearly to the upside. When you're trading sideways market, there's no clear direction either way. You had one clear downward move here, but it just feels like we've reset a sideways channel a little bit lower. So I'm very cautious of that. So, to thine own self be true, guys. You can make great money trading sideways channels. I love selling iron condors for those of you who trade options. Selling strangles if you want a little more volatility, that sort of thing. Of course, you have to have a larger sized account because of the nature of risk, but you can always just spread it off and create an iron condor. So those are great. Options are great. Selling options, rather, are great for these kind of movements. But beyond that, man, it's a doozy. It can be tough for me. So that's it for today's video. Thank you guys so much for watching. If you haven't already subscribed to the channel, please click the subscribe button. I'm making these videos every day, and I love to have you as part of the community. All right, happy trading.